Hello everyone, this is Harvey from Black Forex Traders. So welcome back to my YouTube channel. So today we'll be doing episode 3 of supply and demand. So in this video I'll be explaining how to trade using 2D and 3D drive. So as you can see by the title of the video, so without wasting any time, let's start with the video. But before we do that, I just want to thank everyone who liked my channel, who subscribed to my channel, and the support that you give me. Thank you guys. So let's move forward. So the first thing that I want to do is explain what is 2D drive and 3D drive. So 2D drive is where the market gives you two retracement or true lows or highs before they can reach a certain level where the market has a high probability of a reversal. So, and also on a 3D drive is also where the market gives you three movements towards the certain level where you have a high possibility that the market's gonna reverse. So they don't differ that much. So that's why I wanna explain them to you, so that once you see them in future, you'll know that this is a 2D drive or a 3D drive. So without wasting any time, let me just give you the scenarios first, so that we can have the background knowledge of what I'm talking about once I go into the real chart. So let's start with the 2D drive. So the 2D drive, something like this. You get a rally, then you got a consolidation point, then they break out of the rally to give you another rally. Then from there, you get this kind of movement here. Let me just leave it there. Then this is the kind, let's say the price is somewhere around here, then you marked your demand zone. So in our mind, we think that the market is gonna come to this level here and give us a pattern, then we continue going up. So in this case, you see the market rejecting this level here. The market rejecting this level here, giving you another pullback to the upside. Then out of the blue, you get a rejection towards the demand zone. So in this case, you will have drawn your level or your trend line like this, anticipating the second touch to the trend line after you got this first touch here. So this will be your second touch, where you'll be anticipating a buy. Why? Because you have what? You have your base level here, which is a key level, which is a demand zone here. Then we have what? The two touches to the trend line here, giving you what? A 2D drive. So once you see the market approaching this level on the side for the second time, then you see them giving you a pattern like a W, then this is where you're gonna take your entry. This is a safe entry here. Then your stop loss will be somewhere here. Then this is a 2D drive. This is the scenario of a 2D drive. Then if we can draw the inverse of this one, it will be something like this. It will be something like this. So as you can see, we have our base. Then you can see you have to draw your lines here for marking out your supply level here. So this is your reversal zone here. Then from there you had the first pullback. Maybe the price is somewhere around here, is rising. Then you want to mark your second reversal. Then you mark it like this. Then you wait for the market to approach this level. So mean that you're not gonna sell anywhere in the middle of this trend here. You're just gonna have to wait until market reaches your supply level. So in this case, the market reached your supply level with the second pullback. So this is the first pullback here, as you can see. Then they reversed. Then the second pullback reached your supply level. Then they give you an M formation. Then they dropped. So this is what we call a 2D drive. So let's try and draw the 3D drive. They're very similar, same thing, same approach. In this case, you will have this. Let's make it like this. They won't always be this perfect, but you get the idea of what I'm talking about. So you mark the same thing, you mark your base, which is the consolidation point. Then from there, you're going to connect these two lines here, like this. Then from there, you know that this is your reversal point or your reversal zone. This is where you anticipate the market to revert, meaning that you're not gonna buy anywhere around here. You're gonna wait for them to come to your base here, which is a demand zone. Then they will be giving you what? The third touch to the trend line, then a pattern. Then this is where you're gonna buy the market here. So this is what we call the 3D drive. So let's go to the real chart and try to find these patterns here. Okay, let's try to find these patterns. Okay, let's start with this one here. So if you look here, you can see that we had a beautiful W on the low, then you had this drop, sorry, the rise, then you had this consolidation point here, which is our base. Then after that, you hit another push up, right? So from there, the first thing that we're gonna do, we're gonna mark our consolidation point. We're gonna mark it like this. Then you can see the first approach or the reversal was this one here towards our demand zone here. Then they failed to give us what? A touch here. So then they reversed. So once you see them reversing like this, then you say, okay, maybe they're going up. But the moment you see them reversing like this is where you know that, okay, they are going towards what? My demand level here. Then this is where you're gonna do what? Draw a line like this and just touch it like this. Then you just anticipate them to come what? To come to this demand zone here and give you the second touch or a pattern. Then they continue going up. So as you can see here, this was our first touch, then this is our second touch, and then they did what? They gave you a W pattern here on the demand zone. Then this is where you buy, stop loss, then you take a trade. So this is the first example of a 2D drive. This is where the trend line is connecting 2 points. So let's try and look for another examples. Sorry about that. Okay, let's use this one. So as you can see, this was our high. Then from there we had a drop, then the consolidation point, then we had another drop, then we had what? A reversal point. So this is our first high towards what? The demand, so the supply level here. So this will be our supply level. So this will be our first touch. Then from there you can see the market dropped again, then the market moved up, trying towards what? To challenge the supply level here. So let me clean this and mark this this zone. It's like this. So I'm not trying to show you a clear perfect images. I'm trying to show you what the market really gives you than what we anticipate on the scenarios that we give you. So as you can see, this will be the first touch, then you will draw a line like this. Then as you can see, the market didn't really come to the what, to the demand, so the supply level here, but they give you what, 2 touches here. So usually for some of us, we won't trade this because we'll wait for the market to do what, to come to this level and maybe try and touch one of these 2 lines. But in this case, you can see that the market touched this level here, then they start to drop here. So for this, in order to trade this, for most people, even for me, I usually put my sell limit around here, so they won't be triggered here. They will just reverse here, then they go down. So for me, this I will call it what, a failed setup, because I will want them to come and challenge this supply level here. So for this one here, for me, it will be a failed setup, but it will be a failed 2D drive also, because for me, I will want this high to be here, not in the middle of the trend like this. I won't trade this because if I try to trade this, then I'll be going against my rules, because this can turn into what, a 3D drive. They can just give me this movement, this reversal, then they come back towards the supply level, then they reverse. But in this case, they didn't give me a 3D drive, they just give me a 2, but a failed one, because they didn't touch my supply level here. So this is what we get into in the market here, not a picture perfect trades. So let's try another pairs. Let's try this one. Okay, this one is the one that I analyzed on Thursday. Yeah, I think it was Wednesday. So as you can see, it is also what, a 2D drive that turned into a consolidation and a failed trade. As for me, they hit my stop loss with this reversal here. Then this was NFP on Friday, but you can see the scenario that I had what, my base, then I had my first pullback towards the demand zone, then this was the second touch here. As you can see, this was the second touch. Then from there you can see that they went up, but not for long, then they reversed. Then this was what, a failed trade for me, as they hit my stop loss, because I anticipate them to come to this level here, but they fail. So this is another what, an example of what, a failed setup. But the scenario here is what, a 2D drive. So if you were trading or you were scalping, you're going to make profit, because this high you will take your profit, then you're out. But for us who hold for more than 4 hours, we will wait for them. My first take profit was somewhere around here, so they even failed to reach my first take profit point. Then, but you can see the background information is what, a 2D drive. So let's try maybe and find another one. Okay, let's use this one. So as you can see, we had the first high, then we had this pullback, then this one, the consolidation, then the drop again. So this is a drop, base drop. Then from there you had what, another reversal point. But you can see that they didn't respect this base here. It was broken. So if you were looking for a reversal here, you can see that it was broken above, then a retest, then another reversal point. So for us, we will wait for them to do what? We'll mark this level here. Right, then from there you can see that we have this high, which was a very, very ugly high, but it is a high. Then you're gonna mark your levels like this. Then this will give you what? A 3D drive, meaning that this is what your base. As you can see, this is a consolidation point, but we're gonna use the last drop candlestick here, the first one, sorry, which is this candlestick, which makes the move out of this consolidation point here. Then as you can see, this is the first high, this is a small pullback, then the drop, then from there this is the second high, which came close to the demand zone, so the supply zone. So most people, yes, they will trade this, but for me, this is the trade that I would have taken, because they came inside my supply level here. Then they gave me a rejection candlestick, which is this one here, the bearish candlestick, the red one. Then from there, once it closes, this is where I take my entry. Then my first take profit will be this previous low. Then the second one, it will be somewhere around here. I'll draw a line here for the order block. So this is the what a 3D drive. So let's try and find maybe two last examples. Let me try another one. Let's go to smaller time frame. Okay, I don't see anything here. Let's try NZD, JPY. Let's go to 1 hour. So this is another trade that I missed because I had my pending orders here, my buy limits here. They were missed by this reversal point here. But the scenario here is what the base. Then from there we had what the first pullback, which is this one. Then we had another rally. From there the market reversed towards what the demand zone here. So as you can see, they almost touched, they didn't touch our trend line, because our trend line it was corresponding with the demand zone here. Then they came close to the demand zone. But for those who take their trades manually, they will have taken their buy here once they see that the trend is reversing close to the trend line and the demand zone. So this makes this what a 2D drive. This is a 2D drive because we have what we have our rally, consolidation, then rally, then a pullback towards the rally that fails, then they go up again, then they come down towards the rally, they give us a pattern, then they move up. So this will make this what a 2D drive. So this is a 2D drive. This is the scenario here. So I hope this helps you guys. These are the examples that I wanted to show you. So next time when you're in the market, you will know that these patterns they happen, because this one is also a recent one, because I analyzed this market while the price was somewhere around here, because I saw that okay, the market is dropping, so I'm anticipating them to come to this consolidation. So if I was someone else who marked the whole consolidation like this, they wouldn't have missed this trade here, because they will make it like this. So they will be very correct, then they will be able to put their buy limit somewhere around here, then they will be triggered, then they will be in profit. So for me, I used this line, I drew it here, somewhere around here. So for me, it was a missed trade for this 2D drive trade, but it was a correct one because I was in the right mind and the right time for the upwards direction, but they didn't trigger my trades. So this, guys, is what I wanted to share with you. I hope this helps you guys. So I will see you on the next video. I will be dropping another video soon. As I drop every week, I drop the market analysis for every week. Then from there I will drop another episode 4 of supply and demand. So I will see you on the next video. Thank you, guys.